whether you define it early, middle, late, or it's the bull run will continue. What could really elevate things or change things is, I think, what really is in effect a bubble in the U.S. equity market. From an international point of view, 70% of the world's market cap is in the U.S. markets. The rest of the world doesn't count. This is amazing. And in 1980, the market cap in the U.S. was about 30% of the world's markets, which was kind of in line with the size of the U.S. economy relative to the rest of the world. U.S. economy is, it's about 27, 28, 29, 30%, depending on how you measure it. But it's more or less, let's say, around 30%. And in 1980, the market cap was about 30%. Well, now it's skyrocketed. Everybody and their brother want into the U.S. market. And I think the U.S. market now is overvalued and overhyped, and it's in a bubble. So when that bubble pops, you can watch gold take off again, accelerate. If you look at what's happening to gold, the last month it's up, the last 3 months it's up, the last 6 months it's up, year to date it's up. Last year over year, it's up. It's in a bull run, and it's going to stay in one that could be motivated if the U.S. equity markets pull back, which I think they will.
Well, let me ask you this then.
And by the way, one reason that I say that I use the word bubble is that when you get every dog and cat saying the same thing, that the U.S. is the only place to be. The U.S. is an overachiever. The U.S. this, the U.S. that, and we all want to rush into the U.S. That's when my contrarian juices get flowing, Jesse. So something is wrong. If everyone is saying exactly the same thing, it's about ready to pop.
And so are your contrarian juices leading you to non-U.S. jurisdictions when it comes to the equities market, emerging economies or otherwise? Are you seeing value in other parts of the world that's maybe being overlooked by market participants?
In principle, yes. In practice, for me to give you any specific advice, I don't have any specific to give right now. If you would have been in Argentina, you would have been in good shape the last year. It's up big time.
Yeah. Well, what about when it comes to the commodities realm overall, looking outside of the gold space? Do you have any thoughts on energy, base metals, anywhere else in the commodity sector that you think could outperform up ahead?
I think you have to. China, of course, is the elephant in the room when it comes to commodities. So you got to watch China. Now, China has just made the Politburo last week made an important statement. They said that they wanted to have loosen up on the money, and they're right, because Hanke's golden growth rate for the rate of growth in broad money in China is a little over 11% per year, and that would be a rate consistent with hitting their inflation target of 3% per year. How fast is it actually growing? It's growing about 6%, way below. They're suffering from anemic growth in the money supply. So what the Politburo said is the right thing. They want to increase the money supply. Whether they're going to be able to pull that off or not, I don't know. But if they do, then that's very positive sign for commodities. So that's on the positive side. Now, another thing that's positive and could create spikes is the geopolitical thing. If the U.S. keeps pushing them, they're going to squeeze the rare earths and the critical materials. They've been doing this, by the way.
Yeah.
Just in the last few weeks. Since August, they've been putting the squeeze on various selected critical materials. Just take antimony, for example. That first they put a restriction on antimony, then on December 4th, they put a ban on exports of antimony going to the US. What's happened to the price of antimony? It's gone up 70% since the restrictions in August. So which is it? What's another one that I'm looking at? I again, lithium is basically been wiped out, but it's going up. I think it's bottomed out and will go up, and the consensus thinks it's going up. The difference I have with the consensus is that I think there'll be some upward spikes along the way, and we might very well get a big spike next year. So the lithium market has bottomed. I agree with the consensus. It's going up, up, but I think the consensus is missing the analytics and diagnosis of the market that will lead to occasional spikes as it's going up. So those are two. Again, watch the money supply in China is the key. The key is the money supply. Remember, if you change the money supply, what happens? Nominal GDP goes up. If you goose the money supply, nominal GDP goes up, and nominal GDP has two components: the real growth in the economy and inflation. But it takes time. There's a lag between the change in the money supply and when the occurrence of asset price changes occurs. They will go up first, then economic real activity will rev up a little bit, then inflation will rev up. So we have to watch that, because if it occurs in China and the money supply, they really do get it going, and they be our policy prescription, which is correct, by the way. If they actually can implement that, then China will be growing more rapidly, and inflation, by the way, will come up. Now it's non-existent. It's 0.2% per year inflation in China. It's way below the target of 3%. So if real activity starts, if the money supply goes up, real activity will go up, asset prices will go up, inflation will go up, and that's going to be very positive for all kinds of commodities. In addition to that, that's the demand side of the picture for commodities. The supply side could be very disrupted by China putting restrictions on various critical materials. You know what Deng said in 1991, I think, or 92. I can't remember for the year for sure. He said, OPEC has oil, China has rare earths. And by the way, since then, they've developed a whole set of strategic policies dealing with rare earths and critical materials. So they're locked and loaded. If Trump wants to screw around with China, baby, they're gonna hit back hard.
Very interesting.
And they've given him a little bit of a taste of what's coming down the pike, by the way.
Yeah.
The U.S. is just totally behind the curve on this. They don't understand what's going on whatsoever. And they don't understand the fact that China totally dominates in what I call the 3 M's: mining, metallurgy, and material sciences. If you look at education in those fields and so forth, the top 20 universities in the world in those 3M fields they're almost all dominated by Chinese universities. Whereas if you look at the top 20 universities in the world in general, not in those special fields, China has nothing. They don't show up at all. So they've put all their eggs in the critical materials field. They dominate it, and they're going to use it as a weapon of war.